Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, January 6th. We got a bit of economic news released, so we'll jump right into it. We'll start off with the ADP employment numbers. Now, this is for the private sector here. So last reading we had in November was 211,000 new jobs were created. And for the month of December, we had an uptick to 257,000. So good numbers overall right there. So remember, on Friday, we do get the Bureau of Labor Statistics numbers, and those are the ones we'll be more carefully reviewing. We also got the trade deficit for the month of November, and we see that improve. So if you see October at 44.6 billion, we were supposed to drop down to 43.8 billion. It dropped even further to 42.4 billion. A lot of that is due to most likely a stronger dollar. So, and then factory orders for the month of November, we see a drop in there. So we had a nice one in October at 1.3% growth, but in November we contracted at -0.2, just as forecast predicted. And then last but not least, we got the ISM non-manufacturing, also known as the services index. So anything above 50 in this index is considered expansion. So as you can see, we are still expanding, even though we're not as in the area we're looking for. So in November, we had a 55.9, and we thought it was going to increase a little bit to 56. But it dropped a little bit down to 55.6, so about 0.6 basis points. It dropped right there. And later today, about 11 o'clock Pacific Standard Time, we're going to get the FOMC minutes released from their last meeting in December. So this will be important to review to see what the Fed's going to be looking at, clues as to what's going to trigger more rate increases and stuff, and see what their thoughts are, what their concerns are in the economy and everything. So this will give them some more insight as to looking forward to the future rate hikes. As we've heard over this past week, a few members think it's realistic to see anywhere between 3 to 5 rate hikes this year. So we'll have to kind of keep our eyes as to which meetings those will most likely take place, and what needs to take place for them to do so, or maybe even change course. So we'll have to kind of wait and see. So expect a little volatility around 11 o'clock Pacific Standard Time, even over maybe even course the last few hours of the day. And then tomorrow we may kind of swing back a little bit and get some consistency. Now, we had some decent economic numbers today, but the stock market's still down, especially the Dow is down over 200, and a lot of it is taking place from the North Korea test. They apparently did a test on a hydrogen bomb, and they said that it was successful. So this is creating rattling the markets a bit as to what this is going to mean, especially with there's so many distractions going on between tensions with Iran and Saudi Arabia to U.S. and Russia through the Syria. And now you got this type of scenario going on. And then also we had a drop in oil prices again. We're down in the $34 range again. So this is kind of helping. This is kind of pushing the stock market down again. And then last but not least on the headline news is we got the Chinese had their services index, which is kind of like our ISM non-manufacturing. Basically shows decline. It's a 17-month low that they've had on their index rate over there. And of course that's hurting things. The good thing about it is the U.S. economy doesn't seem to be, as the Fed has been stating, the numbers that are coming out aren't indicating that all this global is really affecting us much. So we're not rapidly growing, but we're still growing at a modest pace. And so even though there's a lot of turmoil going on a global level, it doesn't seem to be affecting the U.S. economy as dramatically as one might suspect. So let's take a look here at the bond market, and the bond market is actually up. As you see, we had a couple of stars. So this is kind of indication as to a lot of indecisions, and we've had a lot of panic selling and stuff on the stock market from earlier on with Iran and Saudi Arabia, the turmoil going on there on Monday, and then we also had today with the North Korea. So you can see we were down further. We're having these star effects. So the gaps are closed. We don't really have any gaps here, but we are up right now about 22 basis points, which translates to better pricing for interest rates today so far. So again, this could change, as we mentioned, with the minutes. They're being released later this morning. But just be a little cautious heading into the day. All right, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care.